Good day Forex trader. Your USD Forex Signal, bearish below $1.0937. Today's your USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. London time today. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.0937, $1.0956, $1.0985, or $1.1025. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to run. Long trade idea. Go long immediately upon the next touch of $1.0710. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote last Thursday that we were seeing a bullish rounding near $1.0900, which was pushing the price back up towards the nearby resistance levels in a bullish retracement. The question was how far this retracement would run. I thought the best approach here would be to look for a new short trade entry from a convincing reversal on the hourly time frame off any of the nearby resistance levels identified. This was a good call as the bullish retracement failed at the first resistance level of $1.0937 and produced a nicely profitable short trade. There has been little change to the technical picture, with all the key support and resistance levels remaining the same. The price has remained below the nearest resistance level at $1.0937 since last Thursday. The only change has been the reluctance of the price to make really significant new lows at or below the $1.0850 area. The US dollar remains strong, but the euro is showing a reluctance to make a real breakdown, unlike the Japanese yen where the central bank is actively pushing lower prices. Despite the price's inability to break down, the long-term outlook is bearish, and the trend is clearly downwards. So short trades from clear bearish reversals at $1.0937 or any of the other resistance levels identified above continue to look attractive. Some analysts believe the euro is getting a little strength from President Macron's clear first-round victory yesterday in the French presidential election, but I see any such strength as exceedingly small and likely to be short-lived. Gbp Usd Forex Signal, break and retest highly likely. The pair will likely keep falling. Bearish view. Set a sell stop at 1.300 and a take profit at 1.2950. Add a stop loss at 1.3100. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3050 and a take profit at 1.3100. Add a stop loss at 1.300. The Gbp USD crawled back slightly on Monday morning as investors position themselves for a busy week. The pair rose to a high of 1.3035, which was slightly higher than last week's high of 1.2982. UK and US economic data. The Gbp USD pair has been in a strong bearish trend in the past few weeks as investors worry about the ongoing market risks. The sell-off accelerated when the Federal Reserve published hawkish minutes. The minutes showed that the bank was committed to deliver more rate hikes and start a period of quantitative tightening. This week, the focus will be on important economic data from the United States and the United Kingdom. On Monday morning, the Office of National Statistics, ONS, will publish the latest manufacturing and industrial production numbers. Economists expect the data to show that the two sectors rose slightly in February this year. The ONS will also publish the latest GDP numbers. The next important numbers will come out on Tuesday when the UK will publish the latest employment numbers. Data published in March revealed that the UK unemployment rate declined to 3.9% while the economy has been adding more jobs. The key number to watch will be trends in wage growth. The most important data from the UK will be the latest Consumer Price Index, CPI, that are scheduled on Thursday. Economists expect the data to show that the country's inflation rose from 6.2% in February to 6.7% in March. The core CPI, on the other hand, is expected to have risen from 5.2% to 5.4%. These numbers will provide signals of the next actions by the Bank of England. The US will also release its inflation data on Wednesday. Economists expect that the country's inflation jumped to a multi-decade high of 8.5% while core CPI rose from 6.4% to 6.6%. Gbp Usd Forecast. The Gbp Usd pair managed to move below the symmetrical triangle pattern shown in pink. This was a sign that bears were taking over. The pair then managed to move below the important support at 1.3047, which was the lowest level on March 9. It seems to be attempting to do a break and retest pattern, where it will retest this level. The pair also moved below the 25-period and 15-period exponential moving averages. Therefore, the pair will likely keep falling. This will be confirmed if it moves below last week's low at 1.2980. Aud Usd Forex Signal, bears in driver's seat for now. The pair will likely continue falling as bears target the next key support level at 0.7400 ahead of the US inflation data. Bearish view. Sell the AUD/USD pair and set a take profit at 0.7400. Add a stop loss at 0.7520. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7475 and a take profit at 0.7550. Add a stop loss at 0.7400. The AUD-USD pair lost its bullish momentum as the Federal Reserve and Reserve Bank of Australia, RBA, convergence emerged. After initially rising to a high of 0.7661 last week, the pair declined by more than 2.6%. Fed and RBA convergence. The RBA has been one of the most mysterious central banks in the emerging markets. In 2021, the bank insisted that it will start hiking interest rates in 2023 or 2024. It continued this tone in its February meeting. However, last week, the RBA signaled that it was losing patience with inflation. As a result, the bank's statement provided hints that it will start hiking interest rates in its June meeting. This will be a notable period since it will come after the country's election. The hawkish RBA sentiment coincided with that of the Federal Reserve. The minutes published on Wednesday showed that the bank's officials were comfortable with additional interest rate hikes. Also, the bank sent hints that it will start a quantitative tightening, QT, process. In this, it will start reducing its balance sheet by about $75 billion per month. Fed speakers like Mary Daly, Lael Brainerd, and James Bullard also sounded supportive of more rate hikes, and QT Brainerd was a notable speaker considering that she is one of the most dovish officials in the bank. The AUD-USD pair also declined after the COVID-19 crisis in China continued. The country's government has announced strong lockdowns in key cities like Shanghai. As a result, many companies like Tesla and some Apple suppliers have been forced to close their operations. The next key catalyst for the pair will be the coming American consumer inflation data scheduled for Wednesday. Economists expect the data to show that the headline and core inflation jumped sharply in March. AUD-USD forecast. The AUD-USD pair rose sharply after the RBA interest rate decision. It then quickly erased those gains since the hawkish sentiment was priced in. The pair is now trading at 0.7460, which is slightly below the 25-period and 15-period exponential moving averages. It has also dropped below the important resistance level at 0.7537, which was the highest points on March 25th and 30th. Notably, it is a few pips below 0.7468. Therefore, the pair will likely continue falling as bears target the next key support level at 0.7400 ahead of the US inflation data.